Obviously, I don't know everything about the market, but I can say that moves like these fall into two categories. The reason why I can say they fall into two categories is because of the law of the market, the law of supply and demand. If the market is making a drastic move, especially when it's coming out of a base, what you're seeing is either pent-up demand. In other words, the market maker sees that orders are just flooding in. Buy orders are flooding in, okay? And they start flooding in. More buy orders. More buy orders. More, okay? Now, let me ask you a question, okay? Just think about this logically for a moment. If you knew that there were 50,000 people out there that wanted to buy your specific house, would you give anyone a discount? I mean, think about that. You have 50,000 people lined up to buy your house. They're knocking on your door. Hey, Scott, come on. I want to buy your house. Tim, come on, open the door. I want to buy your house. If you're selling your house for $250,000, would you then give the guy a discount or the lady a discount? Would you say, well, you know what? I know we've got a bunch of other people that are asking me to buy my house. I'll sell it to you for $240,000. I mean, come on. You'd say, hey, stand in line, buddy, $275,000. And what would you do? If you were smart, you would raise the price until you finally got to the point where you had one or two buyers. And then you would stop. And you say, okay, guys, you guys hash it out. You got one or two buyers there. We're up to $375,000. You pick. $375,000. Hey, how about $376,000? Okay, $376,000. You want to go $377,000? $377,000. Okay, how about $378,000? What am I describing? I'm describing auction. Okay, so you'd have this auction. $279,000. Okay, you take $279,000. How about $280,000? So these two guys are just duking it out. $280,000, $290,000, $400,000, $410,000, $500,000. Finally, one guy says, oh, forget it. So you sell your house at $500,000. So what happened? You went from $275,000 all the way up to $500,000. Very quickly, I might add. Now, you notice at the end, though, what happened? You had some bickering, didn't you? I mean, if you only knew what you had on your hands in just this one example, I'm telling you, this one example, if you really understood it and you really take it to heart and you understand what you're seeing, I'm telling you, this is the key to the marketplace. Okay, so let me go through it again. I want to make sure you understand this. Let me go ahead and erase all this stuff. Okay. Now remember, we're looking at this price area. And then we're looking at this drastic move, and then we're looking at this price area. Okay? In fact, you know what? Let me get rid of this pen. Let me turn it off. And we're just going to zoom right on in. Okay? Nice and close. So what we're looking at, and I'll slow down because I got all riled up and excited. Okay, remember, we're looking at this area. Okay? And when I draw a box around it, the market's basically moving sideways. I mean, it's kind of moving down. You can kind of see that it's moving down, but really, it's going sideways. And all of a sudden, look at this. Boom. It just pops up, but then what happens? It moves sideways again. Okay? So, we've got Stan. Stan wants to sell his house. I'll just, we've got a bunch of Roberts here today, too. So Stan, Robert, you're selling your house. Any one of you Williams. So William, you want to sell your house. And you've got it on the market for $275,000. And you put it on the market, and you don't really get a lot of activity. You got some guys that are saying, hey, I'll pay $280,000. Then you have some guys who are saying, you know what? I'll only pay $250,000. Some other guy comes in here at $265,000. Somebody else says $255,000. Okay? What am I doing? Okay, price. It's just jumping around, right? Bing, 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 jumping around. Then all of a sudden,